Let's take one final lap through the material. 12 questions, all drawn from the key ideas we've built together: the math, the markets, the mindset. Take a deep breath. Picture the testing screen. Here we go. Question 1. A 6% corporate bond is trading at 90. What's the current yield? Annual interest is $60. Divide by 900 and you get 6.67%. When a bond trades at a discount, the current yield is higher than the coupon. Question 2. A customer buys 100 shares of stock at 40 and sells one call at the 45 strike for 3. What's the maximum gain? $5 per share in appreciation plus 3 from the premium equals $800 total. Covered calls limit both risk and reward, but they generate income. Question 3. An investor sells one DEF 50 put at 4. What's the break-even point? Strike price minus premium, 50 minus 4 equals 46. Below 46, the investor begins to lose money. Question 4. A municipal bond quoted at 102 1/4 is priced at what dollar amount? Multiply par 1,000 by 1.0225. That's $1,022.50. Premium bond, premium price. Question 5. Which of the following investments offers interest that's exempt from federal tax? A. Corporate bond. B. Treasury note. C. Municipal bond. D. GNMA security. Answer: municipal bond. Treasuries avoid state and local tax, but municipal interest escapes federal tax. That's the core advantage. Question 6. In a margin account, what's the formula for equity in a long position? Equity equals market value minus debit balance. If securities total $50,000 and the debit is $30,000, equity equals $20,000. Said another way, LMV minus DR equals EQ. Question 7. A mutual fund has a net asset value of $18.50 and a sales charge of 5.75%. What's the public offering price? Divide the NAV by 1 minus the sales charge. $18.50 divided by 0.9425 equals $19.62. That's the pop. Question 8. A customer sells a stock at a loss, then repurchases it within 30 days. What IRS rule applies? That's a wash sale. The loss is disallowed and instead added to the cost basis of the new shares. Question 9. A stock's beta is 1.5. What does that tell you about the stock's volatility? It's 50% more volatile than the overall market. If the market moves up 10%, this stock might move up 15. Higher beta, higher risk, and potentially higher return. Question 10. A customer invests $10,000 in a municipal bond yielding 3%. What taxable yield would produce the same after-tax return for an investor in the 25% tax bracket? Use the formula. Tax equivalent yield equals municipal yield divided by 1 minus the tax rate. 3% divided by 0.75 equals 4%. A corporate bond yielding 4% would be equivalent. Question 11. A company reports earnings of $2 per share and pays a dividend of 50 cents per share. What's the dividend payout ratio? 50 cents divided by $2 equals 25%. That means the company retains 75% of earnings for growth. Question 12. A customer places a buy limit order at 42 when the stock is trading at 45. When will the order execute? Only if the stock falls to 42 or lower. A limit order sets the maximum price the buyer will pay. If the market never touches 42, the order remains unfilled. That's 12 questions, each one a quick step through the major pillars of the Series 7: yield relationships, options logic, taxation, margin, mutual funds, and market mechanics. If you can follow the reasoning here without looking back, you're ready. The test isn't about memorization. It's about recognizing the logic hidden inside the numbers. Every question you face on that screen is simply another way of asking, do you understand how this works? And you do. Happy studying. You've got this.